The IRS has just confirmed it. A brand new, massive financial shift for seniors is officially live for the 2026 season, and if you are over the age of 60, you need to pay very close attention to your bank account starting today. We are talking about the One Big Beautiful Bill provisions that have triggered a wave of payments and record-breaking tax breaks, including a specific $6,000 bonus senior deduction that is stacking on top of your existing benefits to create what many are calling a stealth stimulus of up to $1,160 in actual tax savings. But here is the catch that nobody is telling you. This money isn't just a gift that shows up without strings. The IRS has launched a high-speed verification system to cross-reference every senior's Social Security number against a new set of modified adjusted gross income MAGI limits. If you are on the list but you haven't checked the right box on the new Form 1040 SR, or if your direct deposit information hasn't been verified through the new Executive Order 1.247 protocols, your payment won't just be delayed, it will be frozen in a compliance hold that could take months to unlock. I have spent the last 24 hours digging through the internal IRS technical bulletins to find out exactly who is getting paid today, who is getting left behind, and the one deadly mistake seniors are making that is triggering immediate automated audits. We are going to break down the exact income thresholds, the no tax on Social Security loophole, and why your refund might be hundreds of dollars higher than you expected if you know how to claim it. If you want to make sure your name is on that list and protect your refund from the new IRS freeze rules, hit that like button right now, and let's get into the truth about the 2026 senior stimulus. Now that we've established the stakes, we have to look at the why behind this 1,160 figure and why the word stimulus is being whispered in every tax office across the country. You see, the 2026 tax season is unlike anything we have ever experienced because of the full activation of the One Big Beautiful Bill. For years, seniors have been struggling with what economists call the tax torpedo, that specific moment where your Social Security benefits suddenly become taxable because you earned just a few dollars too much from a part-time job or an IRA distribution. But the rules have officially been rewritten for this filing year by creating a brand new $6,000 additional deduction specifically for those aged 65 and older. The government has effectively raised the zero tax floor for millions of Americans. If you are in the 22% or 24% tax bracket, that $6,000 deduction translates directly into roughly $1,300 to $1,560 of actual cash staying in your pocket instead of being sent to the Treasury. That is where that 1,560 drop comes from. It is the direct tax savings that the IRS is now confirming through their new automated processing systems as returns start to hit the ledger today. But here is where the YouTube perfect urgency comes in. The IRS is not mailing out paper checks for this. Under the new Executive Order 1.247, titled Modernizing Payments to and from America's Bank Accounts, the IRS is phasing out paper checks at an aggressive pace. If you are sitting by your mailbox waiting for a physical stimulus check to arrive, you are essentially waiting for a ghost. Starting right now, the IRS is beginning the direct deposit surge for early filers who have already submitted their 2025 returns. This means that if you are on the list, your refund, inflated by this new senior deduction, is moving through the digital pipelines today. But if you haven't filed yet, or if you are planning to file a paper return, you are voluntarily putting yourself at the back of a very long line that might not move until the summer. The IRS master computer is scanning for taxpayers who qualify for this bonus senior deduction, which for a married couple now allows for a staggering $47,500 of tax-free income when you combine the standard deduction, the 65+ edition, and this new $6,000 boost per person. Think about that for a second. If you and your spouse are over 65, you can essentially bring in nearly $50,000 this year and owe the federal government $0 in income tax. This is the biggest financial win for seniors in a generation, but the verification trap is more dangerous than it has ever been. The IRS has updated its AI-driven scanning software to look for what they call provisional income discrepancies. They are looking at your 1099-R forms from your retirement accounts, your 1099 INTs from your savings, and they are cross-referencing them with your Social Security data in real time. In the past, you might have had a few weeks of buffer room while a human agent looked at your file. In 2026, the machine makes the decision in milliseconds. If you don't report every single penny, even if you think it is non-taxable, the system sees a mismatch and triggers an automatic freeze on your entire refund. This is why you need to understand exactly what Modified Adjusted Gross Income or MAGI means for your 2026 return. The IRS has set a strict phase-out for this new senior benefit. If you are a single filer and your MAGI is under $75,000, you get the full benefit. If you are a married couple, that limit is $150,000. But for every dollar you earn over those limits, the IRS claws back 6 cents of your deduction. If you don't calculate this correctly and you try to claim the full amount, when you're actually in the phase-out range, the automated system won't just adjust your math. It will pull your return for a manual compliance review. And remember what I told you earlier. With the IRS operating at a 25% staffing deficit this year, a manual review flag is like a black hole for your money. You could be waiting months to talk to a human being just to fix a calculation that the computer already knows is wrong. We also have to talk about the identity protection layer that is being enforced for the 2026 season. The IRS is now heavily relying on the ID.me verification system to greenlight these higher-value senior refunds. They want to make sure that the list of people getting paid today is actually made up of the legitimate owners of those Social Security numbers. If you haven't logged into your IRS online account and verified your identity with a live scan or a video call, your refund could be held up by a suspicious activity flag. The IRS is terrified of the billions of dollars lost to scammers who target senior accounts, so they have turned the security settings up to the maximum. It might feel like a hassle to jump through these digital hoops, but in 2026, it is the only way to ensure your $1,560 tax savings doesn't end up in a hacker's offshore account. And let's look at another hidden benefit of the One Big Beautiful Bill that seniors are using to boost their payments even further. There is a brand new provision for qualified overtime and qualified tips. If you are one of the millions of seniors who have re-entered the workforce part-time to combat inflation, you might be eligible to exclude up to $25,000 of your tip income or $12,500 of your overtime pay from your taxes entirely. When you stack that on top of the senior deduction, we are seeing some retirees walk away with refunds that are double or triple what they received last year. But again, the IRS is demanding perfect data. They are looking for specific codes on your W-2 forms that identify this income as qualified. If your employer didn't get the memo and just lumped your overtime in with your regular wages, you cannot just guess at the deduction. You have to get that W-2 corrected, or the IRS automated system will flag your return for unsupported deductions. There is also the matter of the new auto loan interest deduction. If you bought a new vehicle in 2025 to help you get around in retirement and that vehicle was assembled in the United States, you can now deduct up to $10,000 of the interest you paid on that loan. But the IRS is being incredibly strict about the Made in America requirement. They are now requiring the Vehicle Identification Number, VIN, to be printed directly on your return, so their system can check it against manufacturing databases. If you leave that VIN off, or if the car was built in a factory overseas, that deduction will be denied instantly. This level of granular detail is the new normal for the 2026 filing season. They are giving you more ways to save money, but they are using higher tech tools to make sure you are following the rules to the letter. We have to address the no tax on Social Security rumors that have been swirling around social media. While the One Big Beautiful Bill does not technically repeal the federal tax on Social Security benefits, it effectively achieves the same goal for the vast majority of middle-class seniors by dramatically increasing the amount of other income you can have before those benefits become taxable. By shielding an extra $6,000 of your income per person, The IRS is making it much harder for you to hit those provisional income thresholds of $25,000 for individuals or $32,000 for couples. For many people who were right on the edge of being taxed on their benefits last year, this new deduction is the magic key that drops their taxable Social Security to zero. That is why this feels like a stimulus payment. It is money that used to go to the government that is now staying in your checkbook. But don't let the excitement of a bigger refund lead you into the filing trap. I am seeing a massive surge in people using free online tools that haven't been fully updated for the 2026 One Big Beautiful Bill changes. If your software doesn't ask you about the new senior deduction or the VIN for your auto loan, you are leaving money on the table. Even worse, if it allows you to claim the deduction but doesn't calculate the MAGI phase-out correctly, you are walking straight into an audit. This year, more than ever, you need to use high-quality preparation tools or work with a professional who understands the Trump tax plan updates for 2026. The cost of a professional review is almost always lower than the cost of a 3-month delay and a $500 penalty for an accuracy-related error. As the IRS processing centers ramp up to full capacity this week, we are also seeing the rollout of the direct pay system improvements. If you do end up owing a small amount of tax despite these new deductions, the IRS is now requiring almost all payments to be made electronically. The era of mailing a check with your return is effectively over. If you send a paper check, the IRS has warned that it could take up to 12 weeks just to open the envelope and credit your account. Meanwhile, the automated system will continue to send you late payment notices because it hasn't seen your check yet. This creates a cycle of stress and confusion that can be entirely avoided by using the IRS Direct Pay portal. It is fast, it is free, and it gives you an immediate confirmation number that the master computer recognizes instantly. Another critical point for seniors to remember is the change to Qualified Charitable Distributions, or QCDs. If you are over age 71-2, you can still move up to $108,000 directly from your IRA to a charity without it ever touching your taxable income. In 2026, this is more important than ever because it helps you stay below those $75,000 and $150,000 MAGI limits for the new senior deduction. If you take the money as a regular distribution first and then donate it, it counts toward your MAGI and could claw back your $6,000 senior benefit. But if you do a QCD, that money stays off the books for the phase-out calculation. It is a sophisticated strategy that can save you thousands, but it requires you to act before you take your required minimum distributions for the year. As the Today Drop continues and more seniors see their balances increase, we have to keep a close eye on the Where's My Refund tool. The IRS has updated this tool for 2026 to provide more specific status codes. If you see a code that mentions Topic 151 or Topic 152, it means your return is in the standard processing lane. But if you see a request for identity verification, do not wait for a letter in the mail. You should immediately check your IRS online account to see if you can resolve the issue digitally. The faster you respond to the machine, the faster the machine releases your money. We are in a new era of interactive tax filing where you have to be as responsive as the IRS's own AI. I also want to touch on the state and local tax, or SALT cap changes, which are a huge part of the One Big Beautiful Bill. For years, you could only deduct $10,000 of your state and property taxes. For 2026, that cap has been raised to $40,000 for those earning up to $500,000. For seniors living in high-tax states like Florida, Texas, or New York, this is a massive secondary stimulus effect. If you own your home and pay significant property taxes, you might find that itemizing your deductions is actually better for you this year than taking the increased standard deduction. This is a calculation that you must run both ways. Don't just assume the standard is best because it's easier. With a $40,000 SALT cap and a $6,000 senior boost, your total deductions could easily exceed $50,000 or $60,000. That is a massive amount of income that the IRS cannot touch. We are also seeing a new level of scrutiny on foreign earned income for seniors who spend part of their year traveling or living abroad. The IRS has linked its systems with State Department travel data and foreign bank reporting (FBAR) records. If you are claiming to be a U.S. resident for tax purposes to get that $6,000 senior deduction, but your travel records show you were out of the country for 360 days, the automated system is going to flag you for a residency audit. They are looking to ensure that these new working family and senior benefits are going to people who are actually part of the domestic economy. It is another example of how the digital net is closing, making it impossible to hide discrepancies that would have slipped through the cracks just a few years ago. The reality of the 2026 filing season is that the IRS has been given a double mandate. They have been told to issue these massive new refunds as quickly as possible to stimulate the economy, but they have also been told to use every piece of technology at their disposal to eliminate fraud. This creates a high-pressure environment for both the agency and the taxpayer. You are dealing with a system that is faster than ever, but also more unforgiving than ever. One wrong digit in a routing number or one missing 1099 form can trigger a cascade of automated delays that could last for months. You have to approach your 2026 return with the precision of a surgeon. Double-check your bank info. Verify your income sources against the transcripts available on the IRS website, and make sure you are claiming every new credit you are entitled to under the One Big Beautiful Bill. As the reports come in of the first wave of 1,560 savings drops hitting bank accounts today, it is clear that those who were organized and filed early are the ones winning this season. The IRS is prioritizing clean returns, those with zero discrepancies and full digital verification. If you want to be in the next wave of payments, you need to ensure your tax profile is updated and that you are using the most current forms, especially the 1040SR, which is designed specifically for seniors. It has larger print and specific lines for the new deductions, making it the gold standard for anyone over age 65 this year. The bottom line is that the money is there, the rules are in your favor, and the IRS is ready to pay. But the gatekeeper is a high-tech automated system that doesn't accept excuses. If you provide the right data, you get the right refund. If you provide almost the right data, you get a definite delay. This is why we are spending so much time breaking down these technical bulletins, because the difference between knowing the rules and guessing at the rules is the difference between a record-breaking refund today and a stressful letter from the IRS tomorrow. We are going to continue to track the direct deposit surge and the manual review bottlenecks as they develop over the next few weeks. If you see a change in your status, or if you get a notice you don't understand, we want to hear about it so we can keep the community informed. The 2026 tax season is moving fast, and the only way to stay ahead of the IRS is to be as informed and as proactive as they are. Keep your records organized, keep your bank information current, and most importantly, keep a close watch on your Where's My Refund portal as the next wave of payments prepares to drop. As we wrap up this massive deep dive into the 2026 tax season, it is clear that the Today drop isn't just about a single payment. It is about a fundamental shift in how the government treats your hard-earned money. The IRS has effectively flipped the switch on a new era of digital enforcement and record-breaking relief, and for the seniors who have made the list, that $1,560 in tax savings is just the beginning. But as we have seen throughout this entire breakdown, the burden of accuracy has never been higher. The machine is watching every VIN number, every 1099-DA checkbox, and every dollar of modified adjusted gross income with a precision that was impossible just a few years ago. You have the tools and the knowledge now to navigate this new landscape. You know that the One Big Beautiful Bill has given you a $6,000 bonus deduction, but you also know that the new ID.me and direct deposit mandates are the only ways to actually see that money in a timely fashion. You understand that paper checks are a thing of the past, and that your proactive response to IRS digital notices is the only way to avoid the manual review black hole. This is your financial life, and in 2026, being close enough is no longer an option. You have to be exact, you have to be early, and you have to be your own best advocate. We are going to be right here with you throughout the rest of this filing season, monitoring the Where's My Refund patterns, tracking the new CP53E notice surges, and breaking down every technical bulletin that comes out of Washington. The 2026 tax rules are complex, but they are also filled with more opportunities for savings than we have seen in decades. If you take the steps we've outlined, verifying your MAGI, checking your Social Security alignment, and filing electronically today, you are putting yourself in the best possible position to secure that record-breaking refund. Don't let the noise and the confusion of the new laws keep you from what you're owed. Use the Schedule 1A, leverage the 1040SR, and make sure your bank information is locked in. The first wave of payments is hitting accounts right now, and by following this roadmap, you are making sure your name stays on that list. Stay diligent, stay informed, and keep a close eye on your accounts as the 2026 stealth stimulus continues to roll out across the country. We'll see you in the next update as we uncover even more ways to protect your wallet and maximize your return in this historic tax year.